Many of you today would have woken up to the news from the US markets that Dow, Nasdaq, even crypto market had a really bad crash yesterday night. And you might be wondering what's happening because they were expecting a rate hike for a long time. They were asking for it and they got it. So what's wrong? The interest rate wise, this is the third cut in about 2 months time. The interest rates are already at 4.5%. The only thing the Fed chair has said is that the way economy is looking, the way inflation might come back, especially because Mr. Trump is saying that I will put tariffs on China and India. So that will most likely increase inflation. So what he's saying is we might have only two cuts next year. This is not something which is carved in stone, however. This could be one, this could be four, depends upon the economy. But people just needed a disguise for the worst news and make the markets come down to a reasonable level. No one wants to own up the froth. The impact on Dow, Nasdaq, crypto, all of that is effectively the froth, which is basically the unreasonable part of the bull run, which had to come down someday. India is not even impacted much with this interest rate at all. If there is some impact, it will be good only because there will be spending which might reflect in some orders coming India way. Why is India sulking for 3-4 days now? Especially today, the way India reacted. In fact, in India, I would say that it was more like retail was already in a panic mode. The markets were not that bad. And there's one point I wanted to share. I'll probably share it in more detail in a nugget later on. We have all talked about the currency printing in the US. Most people don't talk about the currency printing in India. This is coming down. If you see this graph, this is called M1 supply. This is reducing. This is US. India also, this was going up, up, up. There was a little reduction. Last 2-3 months, we have been talking about government not spending much. They are maybe using the money to cut down on the money supply. And this data is still September. We don't have data for October, November. This could have gone down further. While excessive printing was bad, this news is actually good for the economy. However, it will have its repercussions. And in the nugget section today, I'll talk about some Maverick tips. These are actually tips that I've created for myself. I hope that I will follow them. I'm no saint. I do all the mistakes in life. And I'm gonna use these to ride the rough patch. And many of us feel that government is perhaps not doing enough. SEBI has introduced algo trading plan for retail investors. Go fight the big bulls. Graphs today were not very different from yesterday. No respite for the big boys, Reliance, TCS, ICICI, Infosys, HDFC Bank. They were all at the bottom pulling Nifty down. At the top today we had Pharma all the way, Sun Pharma, Dr. Reddy's, Cipla, then BPCL and Apollo Hospital. Today actually oil marketing companies had a good outing. Next 50 also not very different. Here also we had Pharma at the top, current, then oil marketing, IOC, followed by Bajaj Holdings, ICICI Lombard and BHEL. I don't understand at all why Bajaj Holdings is celebrating because most of the companies that are under Bajaj Holdings, they are not doing very well. The tail just got bigger. See here, 765. The number of green sectors is reducing. Bajaj Holdings led holding companies sector is now at the top. Hotels just spent one day at the top. It is at number 2. And investment bank is back at number 3. Real estate number 4. While most of you would have been disappointed with the market today, let me show you a very interesting part. See Nifty? The trading range of Nifty was just 100 points today on expiry day. This next 50 high is a problem. There is a bug from the provider side. The value which is coming every day as a high is today's high. Bank Nifty as well was red only. HDFC, ICICI, SBI are still in green. What happens is in these kind of times, most people prefer not to go on cash and they want to buy stocks which are relatively bigger or safer. That is where money moves to these big banks. Private banks are getting worse by the day. 3 banks hit fresh lows today, IndusInd, AU Bank and Bandhan Bank. Volumes were high today. Most public sector banks recovered in the later part of the day. These cuts are also not big, 0.1, 0.3. For day like today, these are okay. KFin Tech is not going to rest at all. Ever since I sold my holdings, it has been only going up. 7.5% up on a day like today. Even BSC hit a new high along with KFin Tech up 3%. Motilal Oswal also was up, however, it cooled down towards the later part of the day. After a long time, I am seeing IFC go up 5%, that too with a rocket volume. Muthoot Finance hit a fresh high. Overall, the volumes were in the NBFC pack were on the higher side only. See, Bajaj Holding here 1.3% up, just 2% away from making a fresh high. 2x volumes. IT, most of the services firms were not looking that good today. The biggest cut was in LTI Mindtree, volumes were high, several rockets. Oracle and Persistent hit fresh highs along with Coforge. However, the bigger player, TCS, Infosys, HCL, they were down. Defense was red today also. Zen Technologies up 2%, but no fresh highs. Metals continue to bleed, the cuts getting bigger. Volumes are also getting higher. In the oil and gas pack, the oil marketing companies they were up a lot. So was Chennai Petro 5.5%, but that is after hitting a fresh low first thing in the morning. Pharma is operating in totally different territory. It was a sea of green today. This bunch of stock was up 1.6% collectively on a day like today. And Mankind Pharma hit a new high. Fantastic volumes for most companies. Remember, in turbulent times, pharma and consumption are the best hedges. IT also in some ways, but IT has already gone up a lot. In the last fall, the same situation was with consumption because consumption had gone up a lot. So that did not serve as a hedge. No respite for the edible consumption pack. Nestle hit a new low. Non edible also looked similar. Asian Paints and DMart hit new lows. All railway stocks in the red, volumes also were low only. Tata Group, only Nelco had substantial gains 1.3%, otherwise, all stocks down. Same situation with Adani Pack, everything red, including the financiers. The global view was terrible today. The only green is actually also a red, that's the currency INR, and it has finally breached and closed above 85 today, 85.1. Big cuts in most global markets. And after the complete meltdown yesterday, the coins are looking green. That is because they are recovering now. This is a 24 by 7 market. And Ethereum, after touching 4100 2 days back, that's down more than 10%. This is how we looked yesterday, not today. And today the red is there, IT's green is gone, and the reds have got bigger. And FI sell has become bigger. They are now in the red territory, net net. DIs have bought 15,000 crores. And Accenture, which was getting rid of people till about a month back, they have said that the forecast is up 1 percentage point on forex revision, not on business outlook. Also, Bharti Airtel does not know what to do with the cash flow, so they have decided to prepay their loans or their dues for the spectrum. A lot of people in India are saying that interest rate cuts are not required. Consumption is low. Let's find another solution. This is US VIX that was up 25% yesterday. And if you see in India, while the day was bad, there was hardly any volatility in terms of VIX. 1%. My trades for the day, I wanted to be a little on cash. So I sold two profitable positions, Zen Technologies, which has in any case run up a lot. Also Radico Khetan, the run up is there. The money was on the table. And if the markets melt down, these will go down definitely. That's because most people would be on profit here. I bought 1 unit of Praj Industries. This stock is looking good. Ethanol policy. I think there is something happening in Bihar where a lot of ethanol plants have been approved. Fall proofing the portfolios. In fact, that's what I'm trying to do for myself also. The first one is basically think like a chess player. If you don't know chess, then talk to someone who knows chess a lot around you and understand how you observe the opponent. What is the market trying to make you do? For example, first thing in the morning today, most people would have thought what to sell today. And there is no conviction to buy. Definitely, this is the complete pattern for most retail. Herd mentality, if everyone is thinking same, it is the wrong thing to do. So think where will maximum people lose. Don't try to make little money by risking lot of money. The risk reward ratio has to be favorable. For example, don't take a trade to make 5% when the downside could be 20-30%. And you can't have a stop loss which is larger than your target profit for sure. I'm guilty of doing this many, many times. If something has not made money for you in the past, some sector, maybe some instrument like say FNO, then it will most likely not make money in bad markets for sure for you. This particular fall that we are seeing, that could be lot longer. I personally expect that it will be up and down kind of thing, but this is gonna be there for the budget. Rest will depend upon how the budget is. And remember, in the P ratio, E drives P and consumption drives E, which is low. The second point, don't buy great companies of yesteryears. I'm actually reconsidering right now if I'm doing the right thing by holding on to say HUL and Asian Paints, because there are a lot of startups around, especially in the consumption space. A lot of people are buying products from them. Asian Paints, I don't think it is under threat from Birla Opus, but consumption is under threat. Will people get their house painted in these times? This is my concern. It's a new world order emerging. Things of the previous 1 decade, 2 decade, they might change. We have already seen a lot of companies vanish from this planet in the last 2 decades. If you are going to buy something, then make sure that you first pen down what is the reason for the stock to go up. The reason cannot be that it has fallen a lot. The reason definitely cannot be RSI. A lot of people trade based upon RSI. Stocks can remain in low RSI for months, and stocks may not go up a lot, but RSI can get better. Third point, this is very important. I've been guilty of doing that in the past. I'm not doing that at all right now. I'm not touching my ODs as of now at all. Don't leverage. Don't buy on borrowed money. You will have to return the money someday. What if market tanks? Especially on interest. Don't pledge your shares at all. If markets hit a bad patch, suppose there is a down circuit 5%, 10% kind of thing on Nifty, because of any reason which is beyond imagination right now, you will have to throw all the family silver on the street at a lower circuit. Also, if you have lost money in something, don't get into revenge trade at all. Don't try to recover losses from the share where you have lost. Get to a better trade. You obviously did not understand the timing or the stock or the sector. Don't try to do it again. You will lose even more money in revenge trading. For sure, don't use your EMI money and school fees money at all, or your rental money for buying stocks right now. Cut down on your TV channels. At least take it with a pinch of salt if you are watching something. TV specializes in fear mongering. The world will come to an end always in situation like this. And if you are on Instagram or something, you will be reminded of what happened in 2008. Market opened, circuit down on the pandemic day, first day. And TV anchors are famous for changing their views with the direction of the winds. Often these are paid views. If Asian Paints give one good quarter, all of them will be praising Asian Paints for sure. Fifth point, avoid the rush to sell green stocks. I sold two of them today. Remember my Kefin Tech example, that's my favorite these days. We sell whatever turns green because we want to be on cash or we want to buy certain stocks. It has turned green in this market for some reason. The reason I sold Zen Technologies and Radico today was it has been on series of greens. Good profit on the table. Avoid the temptation to not book losses. I can't talk about this enough. The money which is there today in your portfolio is the actual money. What you invested is gone. Now the call is what will take your money or your portfolio up more today. My favorite example, if Tata Motors is sulking right now and UK and China are not looking pretty, maybe move the money from Tata Motors to Maruti. Now I have no idea how these two results will be, but this would be my bet if I was holding Tata Motors right now, book the losses, cut it and move the money to Maruti maybe. Final point, if you can't understand what's happening around you, then just stay out. There is no compulsion to log in every day. There is no compulsion to buy or sell every day. Don't look for ideas for trading in bad markets if you can't understand what is happening around you. Stay out for some time. It's okay. Move your money maybe to ETFs or just to plain cash and stay out. This is not the last fall. Markets will eventually go up only. There will be enough opportunities to make money. Hope this was useful. Stay calm. Markets will be turbulent, but you will have to be prepared for both scenarios. You will have to be prepared for a longish haul. This fall could get bigger and worse and longer. Thanks for watching. I will see you tomorrow.